one of the things that, I guess let me start by telling you a little story about what I'm doing. So in insurance, it's an area that I'm really interested in. I'm also interested in blockchain and sort of following the trends. And I think that there's a lot of things happening right now. You have blockchain, you have insurance, you have IoT, and you know, when you start to look at some of these trends in the industry, there's almost a perfect storm happening in the industry. So I have this concept. I don't mind sharing it out there, putting it out there, because it's not something radically new. It is it's something that exists. So if you look at a power outlet, you have two sockets, probably a little switch here, a little switch there. Pretty straightforward. In some places you have USB sticks, and in other places sometimes you have RJ45 connectors, which are the Ethernet, or other things already happening. But you're also having other things like little IoT sensors that are going everywhere. So part of what I've been looking into is exactly that. It's taking that package, standardizing it, and putting it into the power source. Not remarkably new, just different form factors, and then adding a layer of blockchain, because security is an issue with IoT devices. So if these devices can have immutable data that can't be erased and transmit to a hub, you have something quite interesting. You're taking the best of IoT, you're putting some blockchain for security in it, and you're putting it in a form factor that makes it easy to install with 2 screws and possibly 1 small electrocution. But at least most people can do it in their home or an office building. So it's a pretty straightforward concept. If you can imagine, if we had it all over this hotel room, you could actually get, if you had it in your kitchen, you'd probably have the 2 or 3 sensors in there, the CO2, smoke detector, temperature, moisture, that sort of thing. If you had it in your hallway, you might want to have the motion sensor or a temperature sensor that talks to your Nest in order to get the right temperature of your house. Pretty straightforward. If you had in a building like this, an entire hotel room, you could actually get the pulse of the building, as in you'd know what sort of areas are high traffic, if there's a bit of a moisture leak. You can actually get the pulse of a commercial building, and that would change the way that you do risk assessment. So all of this stuff is great. The reason why I'm telling you is because this is not a new idea, and somebody could take it and do it, and it's difficult to do. It's something that I'm exploring. I'm going to China in September to talk to some people in hardware. I'm a partner in a few blockchain companies. So I'm trying to put the pieces together, but I know it's going to take me 2 years to get to somewhere good. And it's probably going to cost, probably a couple, on the cheap to get the prototype going, at least £35,000, at best 250 in order to get the supply chain in China sorted. And this is just for a good working prototype with an idea on the supply chain. The reason why I'm telling you this is because my background is as a strategist, and I know that this isn't possible to implement because right now the insurance industry isn't in a position to have standards across IoT, blockchain, and that sort of thing. So part of my thinking is roll this out, take time, get it right, because the industry is still maturing, but at the same time, talk to the insurance companies and figure out what's happening with the consortium. So the name of this talk is why the insurance industry needs a consortium. How many of you are familiar with R3? It's the consortium for banks. The banks pay, I don't know, something ridiculous every month, and they all get together, and together they're putting together some standards on using blockchain for settlement, lots of use cases, but they have yet to deliver something to the masses because the industry is at a ceiling where we haven't gotten into mass sort of benefit yet. So there's time, but the insurance industry has particular needs and nuances of how, if you look at how much money goes from insurer A to insurer B to insurer C and back and forth, that's a huge number. There's efficiencies with blockchain there, but if you start to look at IoT, driverless cars, a lot of these new technologies would actually benefit from standards. So one of the things that we started looking into, we started talking to a couple of insurance companies, is the insurance industry needs a consortium of its own in order to get people together and to achieve things that aren't yet possible. And for people like me who have a concept, which is probably 2 years in the making, we can't deliver until the industry is in a position where these standards are in place, or else we have something that's dead in the water or floating around and isn't going to go anywhere. So the concept is Consortium, an insurance industry consortium that that's using that's looking at blockchain and transformation technology. So it's not just blockchain, it's IoT, it's driverless, it's drones, it's all these new things that are changing the way that business operates. So the way that the Consortium model works is getting standardization, information sharing, but also ventures, because together investing in something that's going to benefit the industry is a lot easier than just doing it on your own in a lab, because you still need it to work across the industry. So the whole point of the Consortium is to get insurance companies thinking together, working together, investing together to get some of these, to get things standardized and to move things a lot quicker than we had a couple of venturing guys from various companies talking about how they're working. But if you had at least a percentage of that pooled together in improving the industry in general, it doesn't need to compete with the things that you're doing privately. But that's how it works. And being somebody that works in blockchain and that sort of industry and security, one of the things that we looked at is reducing risk, because what you don't want is to start doing things on public blockchain. So we've talked to the guys at the Digital Catapult, and what we're thinking that would work well is they have a digital testbed, almost like a sandbox, where you can actually use data but in a secure environment that is live but closed off. So creating something where you can actually share the information in a closed environment that's meant for data sharing across companies before you roll it out into the real world makes perfect sense. And when thinking about how a consortium should start, if you think about the R3 model, lots of money going in there, lots of deliverables, none with traction. We wanted to reverse that on its head and actually start the consortium with a tangible benefit. So something simple, but yet complex. So sharing no claims or current insurer information. Right now, if you have a no claims, 5 years of no claims, then you want to transfer it over to the next company, you need to call your insurer, email them, they send you a PDF, you send that PDF to the new company, and the burden is on the consumer. What we're saying is, let's start with something simple, a goal that we need to achieve together. Let's start sharing no claims data across insurers so that you know who a particular person is with, but also to port the no claims information. In theory, you'd be able to tick a box, say yes when you apply for your insurance, port over my no claims so I don't have to do it. Simple customer benefit, but what we're saying is that this concept would, while simple, would require various insurers to work together, start to share data, come together, have meetings in order to make this happen using blockchain. So initially, it's about coming together for a pilot, for something tangible, in order to start to build those relationships and to start to build the framework for sharing data across insurance companies for something simple. You're not sharing financials, you're not transferring money, you're sharing information that's protected, that's closed off, and it would make a simple benefit. So starting with something tangible rather than a lofty goal of having a consortium that does everything with ambitious goals. No, start with something tangible that you can achieve and build a consortium around that. So the way that we sort of thought about doing it was, you start with the discovery period, where you get the right people in the room who understand the process, the flow. You start the build with a partner in the blockchain space who's taking multiple processes, aligning them together and making sure that they align, and having a blockchain layer where it can be passed, where the data can pass. Then have a few weeks of testing, and only after that, only after you've tested and you've started to see how information goes back and forth between insurers, do you then start to explore the consortium, because by then you'll have learned the lessons of what it takes to have the right people in the room, some of the legality, and only then should the consortium start, because at least there you have something tangible that you're working towards. And the first project of the consortium would be to get this thing live, and then use that as the basis for achieving consensus on other data sharing or payments transfers or IoT or setting standards. So that is the concept. And again, selfishly, it's because I know that if I wanted to do something in this space and multiple insurers aren't ready, my concept won't work. But overall, it would help the insurance industry, improve itself from the inside. I know there's already sort of data sharing, but this is something that would, the main thing would be blockchain, IoT, and new standardization for the new services that are up and coming. But it's more about, I mean, David Ross said it earlier, it's been coming up, it's about collaboration, getting together and building consensus. And this is why I think the insurance industry needs its own consortium yesterday. So that's it, that's my time. Any questions on that?
How many insurance companies have already shown interest or are involved?
We've talked to 3, and ideally, in an ideal world, what would happen is probably need somewhere between 20 and 30,000 per insurer from at least 4 in order to get the project off the ground and have the commitment in order to get the pilot to a place where the insurers will actually benefit. So actually everybody gets the benefits. It's co-owned by everybody. It's a co-op. But I'm pitching it here because we do have the right people in the room, and I think it's something that's, you know, I'm not saying it has to happen through us, through what we're doing, but what I'm saying is it needs to happen one way or another, and I'm putting a roadmap that's slightly different, that's based on something tangible. So if there are, you know, 3 or 4 insurers interested in putting together at least an exploratory, you know, committee on getting this going, it'd be nice to get them in the room and to iron it out and see what's possible. Because if you start with a few, it's easier to actually get this going than if you start with 56 or 60 like R3 has, because getting 60 people to agree on wallpaper means you're going to have a wall with nothing on it for 2 years. So starting small and then showing traction for a common goal and then getting others involved would be the ideal way of doing it. And it needs it needs a legal firm sort of at the heart of it. It needs multiple resources internally. So it's not just money, it's also internal resources and access to the processes that need to happen. So we have 3 companies that we've talked to, but like I said, it's early days, and it needs to start with at least 2 making a commitment, because without that, it's just 1 taking a punt.
So the problem is the insurance company is massive. Then you've got L&P, you've got P&C, you've got the Lloyd's market, et cetera, et cetera. So there's multiple, and there's commercial insurance. So there's a whole set of different parts of the insurance industry. And obviously the Lloyd's guys are trying to build a target operating model, and they're looking at how blockchain is going to help them. So there's a whole set of work going on there as one real example of not necessarily organized as a consortium, but in the throes of trying to do it. So where is the focus that you're thinking about around the consortium that you're proposing?
So it's less of a focus on let's say an area, and more of a focus on something tangible. So any of the sectors that you just mentioned there, if the focus was on an achievable goal within a few months to get a pilot going, that's more that's tangible, that's realistic, rather than getting a consortium together and then figuring it out later. So ideally, come together for a project that forms the basis of collaboration and build a consortium on that. There is a real chance that it could fail, which is fine, but at least you're not committing too much resource in advance, and the benefits that you get would be the lessons on building that prototype that you're trying to get to together with other people, and the collaboration that you get. So there's no, I'm not suggesting there's a focus. So if there is a focus, it would probably come organically from the people that decide to get involved.